outlook in mobility, the IT business, and of course, the path for a better working capital, well placed to sustain momentum or not. Let's bring on board V Krishnan, whole-time director and CFO at Redington India, joining in on the show right now. Mr. Krishnan, good morning. Good to have you on the show. Just first, let's get done with the earnings. And your growth has been healthy, broad-based in the first quarter, with your India business and overseas revenue both growing above 14%. While your mobility segment was the clear outperformer, tell us how the IT business and ProConnect have shaped up.
Excellent. See, as you have correctly mentioned, overall there has been a good growth in the current quarter, which is stewarded by both the India and overseas part of the business. Within that, even if you look at IT, the mobility and services, by the way, is an important component of our business in terms of profitability. So that also has grown very well in the current quarter. The IT revenue has grown by about 9%. The mobility revenue has grown by about 23%, and the services revenue by about 18%. So there has been a good growth in all the three segments of our business, and this is true as far as India, and this is true as far as overseas.
Whereas,
and within service, since you asked about the ProConnect, it has been consistently doing well. Even in the current quarter, they have had a growth of 22%. Just wanted to tell you, this company was just 6 years old and has had a revenue CAGR in this period of about 44%. And the profit CAGR of about 46%. So it has been doing very well, and we are very confident in terms of growth in the ProConnect part of the business in the next 3 to 5 years.
How come the slowdown has not affected you at all? Because the areas which you represent, lending and white goods or mobile phones and gadgets, these are very sensitive pockets. World is slowing down, India is feeling the heat, and you are outperforming.
Excellent. Thanks for acknowledging. Yes, we have seen a good growth in the midst of what's lots of challenges across. Number one, first I need to talk about overseas, because you must have seen very consistently we have been growing at a very strong double-digit growth, both in terms of revenue and profits in overseas. And in the midst of, if you look at the markets where we are present, which are Middle East and Africa and Turkey, these are all very difficult and I should say challenging markets in terms of geopolitical situations. Still, our guys have ensured that we have had a consistent high growth segment in these markets, and at the same time protecting the hygiene in the form of working capital and free cash flow. As far as India is concerned, we have had a subdued growth in the last about 2-3 years, and as you see investments coming in the digitalization, in the Make in India program, in the smart cities program, etc. There are a lot of investments that are being made, and uniquely, if you see, Redington has both consumer portfolio as well as enterprise portfolio, which has become a natural hedge, and I would attribute that as a main reason for our consistent growth that we have had in the last many quarters.
Sure. Okay, so going forward now, how do you see the overseas business? Okay, just hold on one moment, sir. We've actually got the new listing today, Spandana. I just want to mark that on your screen, just at a marginal discount to the issue price. That's the new name that we're tracking for you. Remember, of course, that the 1,200 crore issue was subscribed, about 1.05 times, majorly supported by QIBs, and has pretty much listed close to that issue price there at about 825 this morning. So it's not a bad start. That's what was expected. We weren't really expecting a premium to that price coming in on the first day. All right, getting back to our conversation, just to understand going forward how you see the overseas business growing vis-a-vis the Indian business, given the kind of movement we're seeing on the currency front as well currently, what's the outlook there?
We feel India business is expected to grow very fast in the next couple of years. Like I've explained, since we are there in both the consumer and the enterprise space. Enterprise space, we are very keen because that is high profit margin business, and that's where we have a dominant market share in the marketplace. We think that is expected to do very well as the capex cycle gets revived. As far as overseas is concerned, while we will not leave any stone unturned, we would want you to be cautiously optimistic because of I should say, consistent geopolitical tensions that are there, and the recent one being what's happening in Iran. So we would be very careful. We would want to ensure that the capital is protected, risk mitigation happens, our cost of operations are efficient. Yes, wherever there is a opportunity, we will ensure that we grow our revenue and profits. And by the way, it's very important for you to know, for the last 14 consecutive years, if you take Middle East, Turkey and Africa as one market, we have been the #1 player in that market. So for being a leader and holding the leadership position for 14 years itself is a big success, and we would ensure that this gets continued over the next many years.
Margins, they've gone to 2%, if my calculation is right, in a tough quarter. Was that a blip, or 2% now becomes a threshold?
Can you repeat the question? Sorry, I didn't listen.
The margins have gone to 2%. Now, is that the new threshold? Because for the longest time I've asked you, you've said that, look, the ambition to take margins above 2% is there. The 2% margin for the quarter gone by, what you've reported, is that a one-off, or that is here to stay now?
It will stay. In fact, from a medium to long term, I think it would inch up because of higher contribution from the enterprise space. And also we have been in the last 4 or 5 years strongly focusing on the services segment. The logistics, one is ProConnect, has been doing very well. We also have cloud services. We have been a very first mover as far as Indian market is concerned, and that's a very very well positioned business vertical, except that cloud as an industry is at a very nascent stage as far as Indian market is concerned. So we are very confident in terms of margins going forward. That will get aided by higher contribution from enterprise and services.
Right. Thanks so much for joining us this morning, Mr. Krishnan, and talking us through the current state of affairs.